There's an unfortunate sentiment among sellers as well as some real estate agent communities who believe that borrowers with VA financing are more risky than conventional borrowers. This is simply not the case. And in this video, I'm going to give you 10 reasons why sellers should accept a VA offer. Check it out. On this channel, we do a lot of strategy videos like the one you're watching here. So if you're new, please consider subscribing. Let's get on with it. Although it is highly unfortunate that there is so much negativity surrounding VA offers, I can prove to you that VA homebuyers are more likely to get to the closing table and with a higher net to the seller than a conventional buyer. Also, make sure you stay to the end as I give you a pro tip that will guarantee you a better chance of winning your next offer. Here are 10 reasons why sellers should accept a VA offer. Number 1, the VA appraisal cannot come in low without accountability. Now, a little known fact is that the VA appraiser is held accountable to their value. Additionally, before they can even issue a value below the sales price, they are required to inform the lender and request help from the agent to assist with supporting, if possible, the sales price. Now, this is called a tidewater notice. Now, with a conventional appraisal, you don't get a warning signal, you don't get a request for help, you just get the low value. Thanks so much, appreciate that. And really, there's little or no recourse for a bad appraisal. And the appraisal is the reason for the majority of conventional contract cancellations. Number 2, VA appraisals have a better chance to come in at value. Now, in my experience, and I did 229 VA loans in 2021, VA appraised values are coming in at the sales price much more often than conventional appraisals. Number 3, and I'm going to run out of fingers, the VA loan will not cost the seller extra money. Now, contrary to popular belief, the VA loan does not have any extra fees that are billed to the seller. Additionally, there should be no silly repairs requested that could cost the seller money. However, in the rare case of a non-health related repair listed by the appraiser, the borrower can submit to the VA a letter of consideration for these items to be waived. Number 4, the VA listens to their borrowers. In the event of a low appraisal, or as in the case of other appraisal issues like the one I just mentioned, the military member or veteran can submit to the VA a reconsideration of value. The result is that the lender's notification of value, or an LNOV, can be adjusted up. And the obvious benefit here is less of a chance to have further price negotiations after the appraisal is completed. Number 5, VA borrowers have more cash reserves over their down payment. On most conventional loans, the buyers are using most, if not all, of their liquid cash for the down payment and closing costs, leaving little if no room for the appraisal shortage. Low appraisals on a conventional loan almost every time result in subsequent negotiations ending with a lower net proceed to the seller. A colleague of mine put it this way: since VA loans don't require a down payment, the borrower would likely have more cash on hand to help cover any potential appraisal shortfalls. This is from Remy Doyle at Movement Mortgage in Richmond, Virginia. Thanks, Remy. Number 6, VA loans with down payments are rarely affected by a low appraisal. Because VA loans allow for 100% financing, this gives even more room for the appraisal to come in low. So for example, if you have a VA offer putting 10% down, that means the home can literally underappraise by 10%, and the lender would still allow for borrowing the same amount as before. This is not true for conventional loans. In this same example, the low value is a material change to the financing, and the conventional borrower would have only the option of bringing more cash to closing. But if it's a VA borrower, the effect of the low value can be ignored. This is one of the main reasons why VA deals don't just blow up with a low appraisal. Number 7, the default rate on a VA loan is lower. Statistics show that VA borrowers are more qualified, have more stable jobs, and in general, just have their financial house more in order. In other words, a VA buyer has a less chance of canceling a contract than a conventional buyer. If you'd like to see statistics on my study of how over 10% of conventional loans cancel after ratification, see my blog post, Sellers Beware. Details are at the end. Number 8. VA loans give you more buying power. The VA borrower has a lot of wiggle room due to the loan guarantee the VA gives the lender. If the borrower doesn't pay, the VA will pony up to guarantee the lender their retribution. This allows lenders to be more generous or flexible with their qualifying ratios. Additionally, just like with any type of financing, hiccups invariably show up. With a VA loan, this probably won't mean a declination. It won't mean that your deal will blow up. Joy Wood with Movement Mortgage in Danville, Virginia put it this way: don't turn down a VA offer from a veteran. Just don't. I love working with veterans. Their intentionality and calculated risk impresses me every time. A savvy veteran and their mortgage team can easily discern the increased buying power of a VA loan and may use this advantage to make a higher offer than competing conventional buyers. The VA loan option is given to empower home ownership and making housing more affordable to our servicemen and women. And in today's market, exercising their VA benefits will afford the veteran the opportunity to offer more for a listing at the same monthly cost as compared to a conventional loan. It's a strategic move, not an act of desperation. Number 9. Conventional loans materially change with a low appraisal. And I mentioned this earlier, but allow me to elaborate on this concept. Imagine the example of a borrower putting 20% down on a $500,000 home. They're borrowing $400K at 4.25% for 30 years. The payment is $1,967 plus an additional $495 per month in taxes and insurance, making the total payment right around $2,463. Now, their budget for the home was stretched due to home prices, but the couple decided this payment is okay. Now the appraisal comes in low, and not uncommon when there are escalations over already inflated list prices. Now the borrower has to come up with the additional $30,000 to keep the same loan terms. But if the borrower wanted to keep the same loan, $400,000, the loan would materially change due to the requirement of private mortgage insurance, or PMI. This monthly fee would add another $54 a month, putting their total payment at just over $2,500 a month, which now becomes a stretch. I would submit to you that low appraisals causing a material change in conventional financing terms will many times lead to a cancellation of the contract. And by the way, even if the appraisal was waived as a part of the contract. Number 10, selling to a military family just feels good. Now, you know I tried to pull on the emotional strings, didn't you? Well, personally, if I had two competing offers and they were about the same, I would always pick the military buyer. Why? Because I know they deserve it, period. And I hope that all sellers would prefer awarding their home to someone that has served our country. Well, there you have it. There's 10 reasons why sellers should accept a VA offer. But before you doze off, let me share with you a buyer and loan officer pro tip that will guarantee you a better chance to win your next offer. Here it is. The loan officer should call the listing agent. Make it a point for the loan officer to call every listing agent on every offer and explain these simple truths. Sometimes just mentioning a couple will help. And depending on how the conversation goes, your loan officer can pull a few of these out and fire away. This is an absolute game changer, and it's the weight that has tipped the scales for many of my clients to win their offer. Thanks for sticking with me. I'm Rick Elmendorf, and I will see you on the next video.